Welcome back, guys. Welcome back to our community call. Today we have a very, very special guest amongst us. Welcome, Markus. Thank you for joining us today.
Hey, thanks for having me.
Markus, yeah, we'd love to. Before we begin, can you tell us a little bit more about yourself, your background in finance, and how you rolled into finance?
Yeah, sure. I mean, thanks again for having me. Number one, I'm the head of research at Matrixport. Matrixport is an Asia-based digital asset investment firm. We have around $4 billion in crypto on our balance sheet. Of course, it used to be a little bit higher, but nevertheless, it's one of the leading firms in Asia. Before I was a CIO for a company, also like a Chinese crypto conglomerate that's very deep in mining, in venture investing, as well as in digital asset funds. I was the chief investment officer there. Before, I had my own hedge fund for a number of years in Hong Kong, actually, and before I was a portfolio manager at the $40 billion hedge fund Millennium, and spent like a decade in TradePremium, basically on the proprietary trading side. Recently wrote a book called Crypto Titans that really describes the crypto industry from its beginning and how everything has evolved with all the exchanges, and published quite frequently in various forms and in various sources, LinkedIn, Twitter, and so on, and being quite active there with the community.
Yeah, quite the experience, so. Well, let's talk a bit about the topics we're going to talk about today. We're going to talk a little bit about macroeconomics, perhaps even about the ETF speculations, and then a bit more about Bitcoin, Ethereum, Solana, and then especially the concepts of real-world assets, because they're quite specialized in that, right?
Yeah, I mean, Matrixport, the firm I work for, they're quite active in this field. It's one of the growth areas. And I think when you look around, right, the hype is really all about stable coins. People look for remittances, especially, and various people working on various projects there. But of course, there's also this whole move into tokenized treasury bonds and various other factors. And I think we see this already with all these crypto conferences really around the world. Right now, of course, in the Middle East, there are a couple. We had a big one months ago in Asia and Singapore. And real world assets is really like the big growth engine that has come back to the forefront again.
Yeah, indeed, indeed. Well, we're going to talk about a little bit about real world assets at the end because I'm quite interested in that. But let's start off a little bit easy. How are you currently feeling about the crypto market, and how do you see Bitcoin and the altcoin market performing to the end of 2023?
So the year-end target, which I set on February 1st this year, is actually 45,000 for Bitcoin, and this was based on a previous forecast that I made already in early December, that we're going to go to kind of ready to 29,000. This was really based on the view that the macro data is quite supportive for this year. Inflation would come off, and eventually the Fed would stop hiking interest rates. And basically we came from a level of like 17,000, back then. So 29,000 seemed a bit optimistic for some people, but we're sticking to our guns there. And then the other methodology we use, so I use a lot of kind of historic analysis, kind of models, tools, and everything. And basically the January effect, which says, 5 out of the last 6 times when the Bitcoin was up in January, you actually had a all year rally, basically. And we had, of course, a strong rally in January this year, and it really seems like we are going there. So now kind of like at 35, 36, 37,000. So we're slowly getting to the 40,000, and while 45 seemed very optimistic, we seem to be there. And of course I can talk a lot more of other indicators, but I think the view really is that 45,000 is achievable, and I'll still remain quite bullish because of all the the factors that we're having. You've already mentioned one big driver there, but yeah, I still remain quite optimistic. So.
Yeah, indeed. Well, you talked a little bit about inflation, or you said something about inflation. Based on your experience, how can investors navigate current economic conditions related to crypto investments? Like, what macroeconomic indicators should one keep an eye on when investing in crypto? Is it mostly inflation or interest rates, or what are you looking at then?
So the market narrative changes quite frequently. So I think you actually need to have your hand on the pulse here and see, when the market, as you said, focuses on interest rates, when it focuses on inflation. One of the big moves we only had in January 12th, really a few days into the new year, and this was because we had suddenly really low inflation, and then suddenly Bitcoin had a rally of like 7% in 24 hours. It was quite a big deal because we bounced around a little bit in 15,000, 16,000. A lot of people were thinking, oh, at 12,000 I'm going to buy, and then they missed it. I mean, it seems like such a long time ago, right? But I think it's quite interesting. And then the market kind of like didn't really react to inflation numbers. So I keep really close eye on how do we trade actually around those events, and when those events don't matter anymore, right? And I think we came towards middle of the year. I think since July this year, the Fed in the US is on hold, so have paused the interest rate hikes. And I think we're seeing this now more and more over the last kind of like few weeks, where Fed Chairman Powell 2 weeks ago started to be really dovish. Said suddenly there's two-way risk of inflation. Before it was only one-way risk, and there was always up. So I think it's really like this narrative, and of course then I like to put in some historical analysis. And I think the best example is the more recent example of 2018, when the Fed hiked interest rates basically for kind of 6-7 months consecutively, and then we came into 2019, January 2019, and they were suddenly pausing. And for the next 7 months, Bitcoin actually rallied up 300%. Of course, I'm not predicting a 300% rally because we are at a much higher level, right? When we are at 4,000, we can rally a lot easier than when we are at 30,000. But I think this was like one of the triggers for me that, if there's more and more indication that the Fed is on hold, so pausing their rate hiking cycle, which usually means they're draining liquidity, from the economy and from the financial markets, that's usually like a good indication that we tend to rally. And I think the market is more and more focused on macro in the absence of a new, theme for a bull market, right? Of course, the last theme was, a mixture between, NFT minting and DeFi summer, basically, like a long DeFi summer.
Yeah.
And right now we don't really have a theme, right? BlackRock ETF is not really a theme, right? But that's why I think the market is really still focused on macro, and that's why focusing on macro really tends to work.
Yeah, indeed. Well, I completely agree with you. Well, last time you picked a little bit up on 2019. Well, we know how it all ended in 2020 with the COVID recession. Looking at 2024, how do you see cryptocurrency performing in 2024? Do you still think the macroeconomic data will be good, or do you think it'll slide into a recession? And how does Bitcoin fit into that?
Yeah, I mean, I would need to think a little bit deeper into that, right? How it all kind of like plays out. I've already done some preliminary analysis, and it actually looks quite positive and quite bullish, right? I mean, if I just take, one of kind of these indicators out of my toolkit again, right? When the Fed cut interest rates in I think it was in July 2019, they cut it because inflation was low, but also growth was low. And then we had like a 30% correction in Bitcoin because the market just became scared, right? So if the Fed cuts interest rates because inflation is low, but growth stays strong, that's positive. But if they cut because growth is weak, then suddenly there's a trouble in the economy. And I think if we get to that scenario, it might be quite bearish, but I remain quite supportive because on the one side, we have a little bit lower labor market in the US, so this kind of like takes a little bit the pressure for rate hikes out of
Yes.
I guess the Fed's sail. But I would also make an argument that inflation at 3.7% is actually quite high in the US. The slower moving inflation data, which is housing, has actually peaked, and then it tends to go down for many quarters. So I think we're just going to have like a healthy dose of lower and lower inflation, while growth is still remaining, quite robust, at least in the US. And I think that's kind of like the key indicator here. And I would really watch very carefully if the Fed cuts because of just, hey, inflation is just, you know, very low, we can just, you know, push in a cut, versus, hey, you know, growth is really bad, and, you know, the economy is falling out of bed really here, we need to cut. That would be very risky. But I think as long as, for example, US stocks holding up, and, you know, normally, you know, I wrote about this in various forums and channels. Normally we have actually a strong Christmas rally, and this is some, you know, report I wrote about like already 2 weeks ago, that actually, if even for Bitcoin, the strongest rallies tend to be this November, December period, and we tend to kind of peak like 1 week before Christmas. Maybe people need to liquidate something because they're going on holiday or something. But it's really this scenario, and I think we are in this scenario. Suddenly we have this rally, and people kind of freaking out, you know, why do we have this rally? And then it pushes everything up, as, you know, some of the altcoins as well.
Yeah, yeah, indeed. That's a very interesting take on the market. I like it. I like it a lot. So you're kind of expecting like a Christmas rally, or right to end it right before Christmas, more or less?
Yeah, I mean, you know, statistically, it's really, you know, December 18th where we start to kind of peak out for the year, and then there's profit taking, you know, during the Christmas holidays. But I also would remain quite bullish for next year, because you know, this whole BlackRock, you know, other ETF scenario, I think is going to carry on, you know, into the new year. But also when I look at, you know, the last couple of years where we had this kind of like this 4-year cycle, and next year is a US presidential cycle, usually the market does quite okay, right? Because every new candidate is going to like promise, I'm going to do this for the economy. And I might say that, you know, the chances are probably quite high that Trump might be, you know, back into the White House, unless there's a different option. And of course, you know, people have like mixed feelings about him, but, you know, he has definitely tried to support the economy and the stock market as much as he can. So, you know, but also somehow we end up in this kind of, you know, Bitcoin halving cycle. I mean, there's like a few overlapping, you know, scenarios, and one interesting indicator, and I wrote about this like early July this year, and it was triggered on June 22nd. So when Bitcoin makes a new 1-year high for the first time in at least a year. So this is usually when we bottom out, then, you know, we suddenly make a new high, and for the first time in the new cycle, basically. And this indicator has predicted the last 3 bull markets, and normally you have something like a 300% return, which would get us to more or less 125K by end of next year. I mean, it sounds, you know, very optimistic, but I'm a big fan of, you know, working this kind of indicators, and it got me to believe that by the end of this year we would be at 45,000, which again, it looked pretty optimistic, and nobody wanted to believe it, but it looks now, you know, quite possible, I must say. Of course, I'm not, you know, taking any glory rounds here, because we're not there yet, but I think, you know, nobody would say 45 is not achievable now within the current setting. So that's kind of like one indicator that looks actually quite promising, that we sort of ideally we would peak out by end of next year, then at, you know, well above, you know, 125K basically.
Yeah, yeah.
Yeah, our evaluation is like 140K end of 25. What is your time frame when we hit the next stop in the next bull run? Is it like in 24 or either 25?
Well, this 1-year high indicator, and I'm, you know, happy to share, you know, data. I guess what I put some data out already, like on LinkedIn and everything, but it showed that you would make a peak around like 18 months later, right? So the indicator was kind of triggered in June, and normally the first kind of like 2 months we're going a little bit sideways and down, which sort of we did until like September, which is kind of quite you know, funny in this sense, but it's also like various indicators that show that kind of like 6 months after the halving we make a high, so which brings us towards, you know, end of December next year, kind of this scenario. And again, you know, I did a, you know, I mean, of course we don't have so much history for crypto or for mining or halving and everything, but if you just took the last 2 halving cycles into account, the ideal point is actually you buy kind of like 15, 16 months before the halving. And this happened during really the last 2 cycles. And end of October, and this is all, of course, on the record. This is all, for example, on LinkedIn, where I post a lot. But and I published a report on October 28 last year that this is now the best time to buy Bitcoin. And we were like around 17,000. And it was really like this 15, 16 months before the halving, because I mean, the halving moves a little bit about a couple of weeks or sometimes a month or 2, because depending on how many transactions. But it would have been the ideal time. And I think, it seems to be somehow like all predictable. I think what's a little bit less predictable now versus all the other years. The other years, actually, the miners stopped liquidating Bitcoins. They started to hoard them. So there wasn't really much supply coming into the market. But now a lot of the miners are, listed. They have corporate boards. So they have responsibility to kind of keep liquidating. And I think a lot of those miners are also, they were kind of freaking out a little bit, if I might say, when Bitcoin was below 20,000, because the average cost is around 24 for a lot. But I think at this level, they should be quite swimming in money, really, right? They should be quite happy. So maybe now they feel confident again. But I think if we would have been around 24, I would have seen they probably would have just continued to liquidate. But I think we're seeing already from like Marathon, how confident they are that even they're raising capital here at these levels to just deploy more machines. And I think that's kind of also like a quite interesting scenario.
Okay.
Yeah, indeed. Well, you mentioned at a certain point ETFs, and I would like to go a little bit deeper about that, given your expertise in the traditional finance sector. How do you think the introduction of a Bitcoin and perhaps a Ethereum spot ETF will change the overall perception of cryptocurrencies within TradFi? Do you think that could give the market an extra boost?
Yes, I think there are just like so many things to really talk about, and really quite fascinating.
Yes.
So, one good point is really, as Tim was saying, right, about, is crypto suddenly a safe haven in times of financial turmoil? And here, for example, when we had the Israel-Hamas, call it conflict, or the conflict when Russia invaded Ukraine. In both times, dollar yen, which is normally the kind of the key TradFi risk metrics, usually tends to go down, right? Because then the Japanese, they have all this capital spread around the world. They repatriate some of the money. At least that's what people like perceive. And then usually the dollar goes down and the Japanese yen goes up, but the US dollar is the strongest. And normally treasury yields also go down because people kind of sell stocks and then they buy treasury bonds. But both of these, the dollar yen and the treasuries, actually completely reversed what was the perception. So I think I can make an argument that suddenly if there's a risk-off event and you cannot count on that treasury yields going down, so basically people buying bonds as a safe haven mechanism, or people kind of buying yen as a, to protect themselves because, yen is like the safest environment, then what else can they do, right? But the one thing, and gold kind of didn't do anything after the, Ukraine, Russia invasion, like a month, I looked at, 1 month afterwards, and it did some, better performance after the, the Israel-Hamas conflict. But the one thing that really worked in both cases was actually Bitcoin, right? Bitcoin rallied, 12, 15% within a week after those events. Oil went up during the Russia-Ukraine conflict, but then the second conflict, it didn't, it went actually down, right? So it's, even people were saying, oh, there's going to be like a huge Middle East conflict and so on. So it's almost like I would make the case that as a risk-off metrics, maybe Bitcoin might be the most interesting aspect. And when you think, who are the most likely people on a TradFi and an investment bank to trade Bitcoin, it's not necessarily the commodity traders, it's actually the currency traders, right? So as a currency trader, it's like, hey, maybe instead of selling, the dollar yen, so buying the yen, why don't we buy Bitcoin instead? Because that seems to have worked. And I think maybe there's a shift going on in the market like this. That's how I would look at it.
Yeah, that's very interesting.
Yes.
Yeah.
You think Bitcoin become more like Forex trading than like stock trading, actually?
Yeah, I mean, it's really interesting, right? Because also the first crypto exchanges, they were actually modeled, especially any levered, exchange where you can take leverage. They were also, modeled more as a Forex market, right? So there wasn't really, there was just really, no trading fees really. It was just more or less like a bid offer spread, like a currency. And I saw, that's why I think, it seems to have more like a place in people's portfolio. Of course, when Larry Fink from BlackRock as a CEO says, Bitcoin is a new safe haven, I think this just legitimizes a lot, right? I think when we look back in 2020, it was, all the hedge fund managers. It was, of course, first Paul Tudor Jones, but then a lot of others, right? It was, Stanley Druckenmiller. It was the George Soros family office. That within short order, they suddenly all said, oh, it's good to have some Bitcoin, for various aspects, right? And initially, of course, people thought it was like an inflation hedge, but I think this is always like the miscommunication. Is it inflation or is it money printing, right? And of course, money printing leads to inflation, but it's not actually inflation, it's actually the money printing. And this is really when Bitcoin had really outshined. But I think here we had like a period where in kind of between May and September 2020, when a lot of those, TradFi hedge fund managers, all billionaires, of course, saying you should have some Bitcoin. And of course, here we, this year we go above 30,000, and miraculously all these like crypto, first they were very quiet about crypto, but suddenly all these TradFi, billionaires coming out again and saying, oh, you have some Bitcoin, right? I mean, we heard this from Stan Druckenmiller, we have got Paul Tudor Jones, just like the last few weeks, right? And it's kind of interesting. So, it's a lot about if the trend is in your favor, you make a lot of noise about it. And it seems like we have kind of reached the level now. We have brought ourselves about this level, and now we have like this buy-in from guys, these TradFi guys, basically.
Yeah, we see also a lot of supply that is held by long-term investors. I expect also a very good supply squeeze in the next bull run after the halving, maybe. That will create some FOMO, and in combination with the spot ETF, it will create some supply dynamics that are very legend, I think, in this bull run that comes. Another topic where Sam and I are very curious about is Ethereum. Yes, you are very DeFi minded, because of that also a fan of Ethereum and Solana, I think. What is your take on Ethereum for the next bull run? Do you think Ethereum will outperform Bitcoin, or will Solana outperform Ethereum and Bitcoin? That's a take I want to know from you, because Solana is very popular at this moment because the high transaction input and output, also the low transaction fee, in combination with gaming and NFTs. What's your take on that whole concept?
Yeah, a lot of people talking about, of course, that that this cycle, it's like Solana outperforms Ethereum, right? And of course, and next year we have like several premium games being launched that have been really in the development for the last 2-3 years. So they're going to be a couple of really big announcements. And I personally, there's a technical breakout that really looks at sort of like a bigger term triangle that would lift basically, Ethereum up like 1,000 points and would point to like 3,000. That's kind of like a case you can make. I mean, I have been literally up until late September, been quite cautious on Ethereum because the revenue numbers have actually gone down, monthly revenue, transaction fees, and so on. That went down really all the way, from a high of like 1.8 billion in November 2021 to just literally like 60, 70, 80, 90 million for a month, and that's like really, sort of like a 95% drop in Ethereum transaction cost. And that's kind of like really, I think, disappointing, also with the EIP 4844 upgrade, that was supposed to happen, this quarter. It's going to be pushed out now into the next quarter. So, and I would still make an argument that, we don't really see a massive really theme of adoption that's really driving the bull market, right? So we don't have something like DeFi summer when there is, airdrops or anything where people, did a lot of liquidity mining, moving from one protocol to another. So we don't really have like a big story. And I think, so in that sense, I also don't think there will be like this massive inflow from, let's say, TradFi into an Ethereum ETF if it ever comes. It might come, but I think there has also been a debate if it's a security, or if it's like a commodity, as Bitcoin has been defined unarguably by the SEC, by the CFTC, which is very key. And I think the one thing I would say and make an argument, you can, it's defined that Bitcoin is a commodity, and therefore it can be implemented in TradFi portfolios, and therefore help with kind of the risk mitigation, right? Of course, Solana is extremely volatile, and I think here, there are like a few interesting aspects, I think, why we rallied, right? Of course, one assumption was, I think it sort of like started with a misunderstanding, or with a headline that was misinterpreted, that there has been a deal that the FTX creditors, can get back 90% of their money. But what this actually was, that normally if you transfer money from an exchange or for any company that is in bankruptcy, then 60 days before the bankruptcy, all the capital is actually liable to be part of this bankruptcy. So if you would have withdrawn, $1 billion a week before FTX went bankrupt, you might have been like really, happy about yourself that you really timed this well. But actually the court can, or the judge can actually order that money to be returned. And there was a deal that actually sort of like, well, if you pay, 100 million in that case, you can keep the 900 million, but you need to pay the other amount. And I think people kind of misinterpreted that actually, that FTX creditors would have had more money, and therefore there would be less Solana selling. And I think this is how kind of we started, this rally. And of course we had, Breakpoint, suddenly this time, in Amsterdam, which was maybe, a bigger impact for the market, but, it coincided with some other conferences. A lot of people were there. It seems like the hackathon was very, successful and everything. And then of course, suddenly the price makes news. And then of course people talk again, about the flippening, which is, not my favorite term, but this is always what people like to talk about. And I think that was just also like a giant short squeeze, right? I think this is, this is what I've, and I run like data every day. So even, on holidays, of course, on, weekends and everything. But I have like, from the top 60 coins and tokens, I have like 15 of the top 60 being really in their 100 percentile range, so the top range really of the, the funding rate, right? The funding trade at a massive premium, which just shows me there's either people going like massive levered long into the market right now, which I can understand to some extent, but not the whole market. I rather think this is more, for example, some VC firms that had maybe, Solana and other tokens that have been like locked up into like the next couple of years. So they have hedged it at a certain point, right? If we drop from, 250 to kind of 50, is like, okay, we better hedge here. And then of course you sort of like neutralizes until you're getting these, these new Solana tokens like unlocked, then you sell them, you liquidate it, and so on, right? You're being disciplined. But I think we just having a lot of those hedges being taken off because suddenly people believe in this rally. And I think I would actually make more the argument that the Bitcoin rally was so strong that suddenly it had like a change in people's perception, and people became so bullish that, okay, I've made all this money in Bitcoin this year, let's sell some Bitcoin and move into other tokens. And I think this is why we also suddenly seeing that the Bitcoin dominance has gone down, right, from 53% to 51%, while at the same time we're not really seeing that Ethereum dominance has really gone up, right? So this is a few tokens. I think Solana, of course, is making massive headlines, but I don't think we're seeing this across the board yet.
No, I totally agreed. Totally agreed. Indeed, that's a very interesting point of view. Well, let's talk a little bit more about real-world assets because you're specialized in that, and I would like to love a lot more about that. What kind of tokenized real-world assets are you most excited about in the future? Is it tokenized real estate, tokenized stocks, or tokenized commodities or treasuries, like you mentioned earlier?
So a lot of people, I think, looking at tokenized real estate, right? Because real estate has a lot of transaction fees. If you buy property through, let's say, a company, you only pay stamp duty once, right? And then you can actually sell the company, and the ownership changes, and then there is no government stamp duty, right? And some places, for example, Hong Kong just lowered the stamp duty for foreigners from 15 to 7.5%. And Singapore just increased it from like 30 to kind of 60%, right? I mean, you're paying literally a 60% premium as a non-local. And I think it's just like, of course, enormous amount of money. It takes a long time. And of course, what needs to be done with anything broad that is off-chain, on-chain, is that you have a proper legal framework, that you have somebody who really checks if the assets are really there and in good order, right? It's it doesn't do if you have just like an oracle, right, where is the price correct, right? It needs really that the house is still there that you might have tokenized. But when I speak to regulators, and I spoke recently twice actually with with ADGM in Abu Dhabi, I mean, this is what they're really focusing on, right? That they're setting the level playing field, because a lot of people in, for example, Abu Dhabi actually are interested in bringing their real estate on chain. A lot of deals in Dubai actually happen in crypto, right, or in stable coins. I mean, this is becoming more and more important. It's a lot more efficient to move money around and so on, right? You don't need to wait like days if I don't know, let's say $1 million has really arrived and everything. And so I think that is kind of like one of the biggest viewpoints. A year ago, a lot of people were trying to put treasury yields on chain. I mean, I wasn't really a big proponent of that, because I thought nobody in crypto should be in crypto for like 4 or 5% interest rates, right? I mean, this is just not. This is why I also not a big fan of all this Ethereum staking, right, and getting some 3.6% yield, right? I mean, who is buying Ethereum for 3.6% yield, right? I mean, that's not right. I mean, you are in Ethereum because you want to use it for some DeFi applications, for something really exciting, right? So for new protocols, and not just kind of like lock it away and, hey, if I get like 3.6% per year, and that's kind of like TradFi fixed income, boring investing, right? I mean, that's really not why we're here, right? So and that's not really like kind of like a game changer, that's kind of like how I look at it, right? So and you don't really learn much from that, right? I think that's also like the key thing, right? A lot in trading is like, well, you pay a little bit, you play to learn, right? But it just really helps you. I mean, everybody who has moved stuff from fiat on chain and then trade a little bit around DeFi, I mean, you just learn like a lot, right? And I think it helps you personally to grow and maybe come up with business ideas. You see where the pain points are, and if those pain points are solved, it can make a big difference, right? And I think that's what a lot of people sort of like don't understand. And if you just do fixed income investing, I mean, you don't really like learn anything per se, right? And that's kind of how I would make. But I think the biggest thing is really that is tokenization really like the big bull market right now? I think people need to get a bit more excited about it. Need to see the real use cases. I think there needs to be more done from the regulator. But again, I think with crypto, and I think people need to kind of like understand this, that Bitcoin per se, crypto started in the US, but it shifted very quickly to Asia because the level playing field was there. It was ready to really be scaled, right? It was like different factors. The miners were able to really develop really fast the specific mining machines. Basically, they were mining literally like 50 times faster than anybody in the US, back then. But also China really opened the door from a regulatory perspective, right? And I think that was key. And I think here, if, for example, the Middle East seems to be really on the forefront and really trying to bring people there and open the level playing field, suddenly you can just you can just, run your projects, everything there. And then you don't need to go through other jurisdictions, right? Because crypto is really global. It is, it's not bound to one jurisdiction, right? And that's kind of like how things can change. So if the Middle East, let's say, focus on tokenized real estate, people are already very familiar with paying, as I was saying earlier, in USDT, for it. I think then it can become a big driver.
Okay.
Yeah.
Yeah, there is a lot of money in crypto, and when you can transfer to real world assets, it's a game changer indeed. I am also very curious about it in a couple of years. How long do you think it will take before it will become more mainstream?
I think I think that it might be actually already like next year, right? Because I think next year there will be more openness and regulation being rolled out. I think this year there have been done, a lot of work on really, how stable coins fit into the economy. We're hearing more and more news, let's say from the Hong Kong Central Bank, the HKMA, how they have been testing, approving their own stable coin already. So I think there is just a lot more stuff in the background, right? And I think if there's one lesson with crypto, it can go very, very fast, right? I mean, when you look at DeFi summer, right? I think it started in May or in June, 2020, and within like 2 months, right, we were just suddenly going up, 5x, 10x, right? And it just really make a big difference. So it can go really fast, right? Because of this whole global network effect, right? And this is what people don't underestimate, very often underestimate, in my view, that it's not bound to 2-3 guys in one country. It's suddenly, if it works, everybody can like chip in and be part of it, right? This is why it's really so powerful. And this is and again, right, I think next year there's some news that Circle might go IPO next year, so maybe they know something. You don't really as a big company like this, right, you don't really IPO into like a bear market, right? You IPO into something like when you know something, right? I mean, think about when Coinbase IPO'd, right? Of course, there's a big interest in the industry really to push asset prices up as much as possible. But basically, Coinbase was launched, I think, or went IPO through this direct listing. I think it was in April 14, 2021. And this is basically when all the DeFi tokens kind of peaked out. And then we had like, another, Bitcoin initially went to 60, and then it went down to 30, and then it went up to kind of like 65-ish around. But this second peak, it was all about, NFT minting. This is like a second bull market in one bull market. But basically all the other, DeFi summer tokens, they all peaked out around the IPO of Coinbase. And I think that's kind of the interesting aspect. So maybe with Circle now saying they want to be listed next year, and I think they tried to be listed at 9 billion before, maybe now the valuation is sort of like 5 billion. I would probably argue because they also lost a lot of market share towards Tether and everything. But I think there might be something that they maybe know the SEC about stable coins issuance, that it all coincides, and that plays beautiful into their hands.
Yeah, true. Well, you talked a bit about DeFi summer in 2020. Do you see any other emerging narrative besides real world assets in 2024 happening?
Well, I look at it every day. I hope I find something. I don't see something yet, right? I mean, because we want this, right? I mean, we don't want to be sort of like, hey, BlackRock is bailing us all out, right? We don't want that really, right? I think it can be like a great narrative from various aspects, right? I mean, I certainly welcome it, right? It doesn't matter why we're going up, right? But as long as the reason is fundamental. But also, what people kind of like underestimate, in my view, or also say as a criticism. So I think it was in late October 2017, it was the CME, Chicago Mercantile Exchange, that got the approval to list a Bitcoin future, and they made this public. And and they finally launched it around, I think it was like 17, 18-ish, around in December, so 2 months later. But during this period, Bitcoin moved up like 288%. I mean, I'm not saying we move up this much, but when there is a Bitcoin ETF announced or approved, it will not start trading immediately, right? It's going to be like a couple of weeks or a month or two or something.
Yeah, months. Yeah, indeed.
And I don't think anybody will actually sell into this, right? It's again the opposite. It's the opposite of what people maybe expect, right? People saying, oh, you know, buy the rumor, sell the news. But I think people is going to be very long into this, into actually the actual launch, because, you know, they're going to feel like invincible, right? I mean, nobody's going to sell ahead, so we're going to like probably squeeze even higher, right? Of course, we had the fake news. Maybe this was like a trial balloon, you know, where we really 10%. And I kind of like wrote in one of the reports that I kind of estimate if it's like announced that we're probably going to go up like 10, 20%, right? And I think we're probably going to go up 20%, despite we have already like rallied into this event. And of course, then people point towards, well, when the Bitcoin future was listed, that was actually the top of the market. Yes, it was the top of the market, but of course it coincided with a lot of you know, ICO investigations by the SEC. But also the Bitcoin premium was at you know, was massively high. So suddenly you could buy your Bitcoin spot and you can sell really the future and really pocket the arbitrage. But of course here, when the Bitcoin future, when the Ethereum future, when the Bitcoin ETF launches, there will be no premium, right? So there is actually no reason to sell. And I think there are all these banks literally around the world with their clients that can suddenly offer them. So I think, as Sam was saying earlier, that there will be more adoption. There's going to be a lot of marketing, you know, coming in. And I think that's, you know, to answer really your question, it's unfortunately the only narrative that we're seeing right now in the market, right? I think with you know, one aspect, I think, which is kind of like what I would call it, the CME's twin, really, of Solana, is the FTT token, right? I don't know if you have seen FTT token, but it went up 600%, right?
Crazy.
Crazy.
I think, but I think it was I sort of like expected it to kind of like rally into year end, because I think by next month the, you know, FTX 2.0 will be announced. And I'm actually very confident there, because I think there is a lot of value. And I looked at the comparison. You know, FTX had really like, you know, 8 million customers and sort of like 5 million or something like active trading, like that logged in every month and traded. And I think this is really like a huge, you know, call it Rolodex or something, right? I think a lot of people traded it. You know, it was easy to use, right? People, you know, I wouldn't argue that they traded because of, you know, SBF. It's more because it was a nice interface. It looked really well, you know, the colors were great and everything. So I think there is probably, you know, I would value the exchange at, you know, $2-3 billion. I mean, you know, now everybody knows it, right? If you say, well, there's a better management now in place, you know, I think there are enough people with money out there that for them it wouldn't cost so. I mean, you know, you need to spend like zero money into marketing, right? And normally exchanges spend like 15 to 30% of their revenues, you know, for marketing, right? I mean, here is just, you know, the marketing has all been done, I guess, by the, you know, by the regulators, right? In this sense, right? So, so that's why I think it was quite a bullish view, and I think maybe like, you know, FTT and Solana also reinforced each other here in this rally. But I would be less optimistic about FTT, because I don't think FTT will be used in any new exchange, right? Because I mean, this is like sort of like a legacy asset that you probably can value at zero. Rather, you issue new tokens, right? This is what Bitfinex has done when they had a large hack, you know, and then you make everybody who has an account and on FTX as a sort of like as a, you know, minority owner, and there will be like huge incentives for people to trade on it, and therefore you can argue then, of course, then the FTX creditors maybe, you know, are not forced to liquidate too much of, let's say, Solana. But again, I think FTT will have, you know, very minor value, right? So
yeah, a bit like Luna Classic and Luna Now.
Yeah, I mean, that's that's a good example too. I mean, you know, interesting how these things suddenly survive, you know?
Yeah, indeed. Well, I don't know, Tim, do you have any other questions popping up in your minds right now?
Yeah, I have one question, actually two questions, for me at least. When we look to the Bitcoin spot ETF, they must buy actually physical Bitcoins. It must be backed by Bitcoins. But when we look to exchanges, the exchange reserves of Bitcoin are just like 2 million Bitcoins, 2.3 million, I think, on all the exchanges. And when we look to the custodian that every institution wants is Coinbase, and they have like 460 K of Bitcoins. When you count that up, there is not enough to if they have like 17 trillion, I think, asset under management. When they just use 1% of it, they have not enough to buy. They have too much to buy Bitcoin. I think the scarcity, what will create that? Because there will not be enough Bitcoins to manage as a Bitcoin spot ETF.
Yeah, so I think the metrics, how much people have on exchanges, is actually outdated. So I wouldn't look at this anymore, because people don't have their coins on exchanges anymore. And of course, Bitcoins will be mined like every day. But I would argue, yes, there's some scarcity out there. People are probably, a little bit happy. Like some of the miners, they have still quite, a lot of inventory, marathon mining and so on. I think they're the highest and have something like, I think overall, I think the miners have like 10,000 Bitcoins. I mean, it might not be a lot, because when I sort of like modeled it based on, let's say the registered investment advisor community in the US, so they manage most of their assets with ETFs. And this is like an argument that has been like picked up by others now as well. But they manage around like $5 trillion US. So if you say, well, 1%, they're going to move into Bitcoin, that's like $50 billion of inflows. I mean, that's of course a lot of money. And as you correctly said, that would be needed to be bought fresh from the market somewhere, or from exchanges, or from someone basically. Yeah. So, and the other argument you can make is, in the precious metals ETF in the US, so basically gold and silver, is around 110, 120 billion US. So when you say, well, 20% of that might be moved into, moved out of gold, silver into Bitcoin, 20% out of 120 billion, you're sort of like at 24 billion. And I did some analysis when I just looked at, let's say over the last year, when Tether's market cap of 10 billion increased, what does it actually mean for the price of Bitcoin, right? So of course, I'm not saying Tether's market cap will increase, but there's a new player in the market. Let's say BlackRock, they need to buy it. So if they have like 10 billion inflow, 20 billion, and so on, what does it mean? And really, it brings you to like a Bitcoin level of something like 56,000, right? Which seems to be very optimistic, but I think, as you said, you can actually really see this, right? I mean, yes, there is some expectations in the market, of course, that this will be announced, but I think people underestimate this, right? Because again, there will not be many sellers. There's not going to be a premium that can be arbitraged away as with the CME futures that we had in 2017. I think here you have in the US especially, you have a lot of endowment funds, pension funds that have crypto exposure through the VC funds, right? But I think the VC funds have also shown over the last 2-3 years that they didn't really outperform the price of Bitcoin, right?
Indeed.
And I think, of course, if you invest in 2015, 16, you have, depending, of course, how your portfolio has been, set up, that you outperform. But I think those people are going to say like, well, we suddenly can just buy it through our broker account, through our prime broker, and so on. It's part of our normal portfolio. And so I do think we get something between like 24 to $50 billion of inflows, and this will be like fresh buying, and the buying actually really starts no matter what the level sort of is, right? Because I think there are enough people who want to say like, oh, you know what, I put like a little bit in it, you know, I mean, why not, right? And that's why I think it's actually really tough to become sort of premature bearish about it. And maybe that's the only, you know, the only theme that is in the market. You know, again, right? I mean, I look for all these themes, but there's nothing that's really, you know, a big driver. And, you know, stablecoin is not really a theme where, you know, where we as kind of traders in the market can make a lot of money, right? It might be good for the industry and adoption and everything, and for the builders, but from a trading perspective, it's just, you know, difficult right now. But it's okay if Bitcoin is the only game, really, right? And some, you know, stories about, you know, about some Solana or some FTX or FTT, you know, happy to take those too. But again, I think, you know, we should just be happy with the current environment. And I think it is a big bull market. And I think people kind of are waking up to that.
Yeah. Do you think also that there is a possibility when once the Bitcoin spot ETF is approved that there will become some other spot ETFs like in Solana spot ETF? Because that's also interesting, huh?
Yeah, it's interesting, but I don't think it's going to happen that quickly. I would, of course, you know, welcome that. I think even the Ethereum seems to be like a little stretch. I think Solana is difficult because of, you know, how decentralized is it really, right? And I think that's kind of because again, like when you look at and you know, all these all these ETF proposals, they're all very different, right? And I think what a lot of people don't understand is a little bit that it's really like the market surveillance that the SEC is really worried about. And what BlackRock was arguing in their filing is, hey, if we're going to use, let's say, Coinbase doing US trading hours, they have actually really high market share versus, of course, when you look at the market share, you know, outside of US trading hours, then other players are, right? And I think you know, and it's sort of, it seems like kind of smart, but BlackRock also uses the same index provider to really determine the benchmark as a CME future versus other applicants. You know, they're using their own, you know, Grayscale, use an affiliate company of DCG. So of course, the regulator is not happy with that. I think ARK uses, you know, ARK uses a different one that has like 12 exchanges. One is Binance. So you can argue, well, maybe the SEC doesn't like that, right? So, but the CME future uses, you know, the CF benchmarks in the UK, you know, that is FCA, you know, licensed and registered. So it's the same one. So it's easy to understand. So I think the proposition is quite strong from them. And of course, the fact is that they quickly launched now, or want to launch also, or threw in like an application for Ethereum. I think maybe there's more than kind of, you know, we are aware, but it definitely tells you that this is not going to be over with one listing of
of course, indeed.
There's more in the pipeline. Again, I think, you know, your question is a little stretch, a little wishful thinking for
yeah, maybe.
but again, I think this doesn't stop, right? And of course, if Solana suddenly goes above 100, I think then you will have a lot more people, you know, that are interested in this, right? Because
indeed.
You know, price makes the news. But also, I think what we always need to like understand that, you know, these protocols and these foundations, suddenly they have a lot of money that can be actually really used to you know, to win over kind of you know, some of these lawsuits, right? I mean, we have seen this with Ripple. You know, I think they spent like $200 million over 5 years. I mean, who has $200 million in legal fees, right? But they seem to get somewhere with that, right? And maybe it's really the money was like well spent, right? But they definitely have a big war chest. And I think Solana has now a big war chest as well, right? But I think they need to work on the distribution a little bit more to make like a stronger case there.
Okay, thanks, Markus. Sam, yeah?
Well, the only thing I would like to ask is, what kind of advice or insights would you give our community? Advice would you give our community when looking at a specific projects? Like, what are the must-haves for a good project, in your opinion?
Well, I think revenues are for me the key thing. I mean, I look at this,
Yeah.
every week, and this is why, last Monday I made a case for Ethereum that we would see a squeeze coming, because revenue started to bounce a little bit from really, really low levels, unfortunately. But I think it was kind of like a tactical call. And for me, revenues is really that people are using the underlying protocol, that something is happening. It's not just people chilling it on Twitter or something. So it's really like the use case that you see. And I think you look back and NFTs, almost like zero revenues, right? I mean, we know about the revaluation of OpenSea. They had to let go a lot of people. I mean, this is not like very healthy for the NFT market, right? And I think this is what I'm always looking for the next big theme for for this cycle, right? Maybe it's going to come a little bit later. Maybe it's going to be visible only a little bit later. Maybe it's only the BlackRock ETF. That's all there is. But I think for me, it's really like revenue, and the rest is sort of, because we know trading volume can be engineered, right? We know other things, price moves can also be engineered. But if there's no underlying revenue, then I think it's very difficult to make really like a medium to long term case for it.
Okay. Yeah.
Okay, yeah, that was very interesting. I'd like to look at revenue myself, and especially like price over revenue ratios. I find that very interesting. So I'm happy that you share the same perspective on that.
Yeah,
Tim, do you have
ideally.
any other? Yeah.
Yeah,
No,
I think
go ahead.
ideally, of course, what you want is the revenue goes up and then the price stays low, because that's really like a sign where nobody has really discovered it, right? And I think that's kind of an ideal case, and it really tells you people are using it, but then people are not really buying it because maybe their incentives are not there. But of course, then suddenly the incentive, the money is there, and then they can put in incentives, right? And I think that's kind of like the big advice. So I kind of, in my research, and I have like a Substack letters and other LinkedIn and the website, the DeFi research
That's
website
great.
that I use, just putting some information there and trying to make tactical calls, trying to keep everybody informed as well as possible, just helping to build the the industry and the ecosystem really. And yeah, I mean, again, I think it is really this holistic move from you look at macro data, because it is sometimes very important. You look at revenues, you look at I do like a lot of statistic analysis also. For example, like 3 weeks ago, Bitcoin was like overbought, right? And overbought means like an RSI above like 70. We were like 85, and of course, intuitively you would say, well, if you have a a stock like Amazon or something at that level, you should sell it. And yes, because the market is different, right? The TradFi market is different, because you have people suddenly, oh, the stock has run up so much, I need to rebalance my portfolio, I take some profit, I buy something that's cheaper. But in crypto, you don't really have this, right? And I did this analysis. It was also, of course, it was, made public and everything, but it actually showed that if Bitcoin is that much overbought, it tends to go up for the next kind of like months or a couple of weeks. And I think it was really like 7 out of 8 cases, Bitcoin was higher. So even if it's overbought, it means something is really happening and really driving it. And I think I look at kind of those kind of analysis, because people don't do themselves really, right? I mean, who sit there and calculates all these things, But I think it is important, because it just helps you to understand how the market is actually different, right? And of course, we know about FOMO, and really FOMO is really kicking in, where people say like, oh, I wish I would have bought at 17,000, right? But I think that's kind of like, just tells me really we can go a bit higher. Next week we get, of course, the CPI data in the US, I think, which will come in
Next week.
lower
Yes.
again, and I think then we can probably get another push, right? Unfortunately, we can also get end of the week, a US government shutdown. So you can make an argument that no ETFs will be approved during a US government shutdown. So maybe we sell off then a little bit towards end of next week into the other week. So I think it's a little bit kind of like timing these things. It's difficult, but it is important, I think, to get the market correct.
Okay,
Yeah,
thanks a lot,
true.
Marcus, for your insights. Very nice.
Perfect.
All right.
Do you have something to say, Sam, or was that everything?
that was everything from me.
Okay, Marcus, I want to thank you for to have you in our middle. It was very nice to hear your insights. For the people that don't know that you have a book, you can make some publishing about it. What is the concept of the book? Can you explain some short?
Yeah. Yeah, so the book basically explains, looks at the four crypto bull markets, and it really tries to make sense how everything evolved, right? So it looks at the 2011, 13, 17, and 21 bull markets, who were the players, how did those bull markets evolve, and really also how the industry really started, how, when did Binance became big, when did people start to use stable coins, when did, this and this happen. And I think it just really tries to help people to really understand how everything in crypto is actually connected. It's not as random. Some government policies actually play, a monster, have a monster impact on the economy, right? So why did, crypto was really big in Hong Kong? Well, because there the central bank said, well, you don't need to be regulated as a crypto player. So everybody went there, right? So if suddenly the Middle East now says, well, here's the level playing field, maybe then the crypto industry was going to move there. And I think that's kind of like helped me to understand a little bit. And the key thing was also that no matter, as somebody, said, crypto people are really tough in, taking the punches, as, all these things. But it also tells me it's not going to go away, right? I mean, this was really, and I wrote most of the book really around, kind of like, November, December last year really was kind of like touching, December and January, and it's really well researched, 650 references and everything, and it just tells you the facts. But it was really for me that, no matter, and Bitcoin was really trading between, 15, 16, 17,000, I really realized this is just not going to go away, right? I mean, there was always the risk, between these periods before that the regulator is going to like try to shut it down completely. Of course, I don't think that would have been possible. But I think here the aspect is really that it will just not go away. It's going to help you tremendously to understand how, how certain players traded it, how Elon Musk had, how impactful he was on Dogecoin, these events. I mean, it just describes a lot how, how Bitcoinica was started. I mean, it's just like you read this over the weekend, and I bet you're just going to learn a ton.
Oh, nice. I will buy it definitely. Yeah. Thanks.
Mm-hmm.
Okay. Thank you. Have a nice evening, Marcus. For the audience, thank you to come and listen. Don't forget to subscribe and to follow our Discord server. The same for Marcus. Follow Marcus on LinkedIn, Telegram. DeFi Research is his Substack, I think. He has very nice insights and nice reports also. Thank you, and hopefully we speak you soon in the next year maybe to give an update about the market. What do you think? Okay.
And the 2024 views, which I need to really write down, the next 2-3 weeks to hammer them out.
Okay, perfect. Thank you, Marcus.
By the way, Solana was one of my top 5 picks last year for this year. And we were
okay.
Nice call.
Okay, I'm very curious about your report.
Yeah. Including GBTC. So
okay, thanks. Nice. Speak to you soon, Marcus. Bye.
Okay. Thank you. Bye-bye.
Bye.
Bye-bye.